Trading is complicated, but my community members have won all of these trades just this past week using the Easiest Scalping Strategy I trade daily. So if you're tired of being out in the cold,
let me teach you a high win rate scalping strategy that I use to heat up my accounts. Now, I don't promise or guarantee any future trading results, but if this helps you, smash the like button, subscribe to the channel, read the disclaimer, and let's dive in. The easiest scalping strategy that I trade daily all starts with one candle. I mark out the high and I mark out the low of that candle. I wait for an impulsive price move outside of that range, creating displacement. Then I enter my trading position, and if it goes my way, I smash a take profit. Now, you've probably seen other videos explaining this strategy and how it's always at 9:30 a.m. Eastern, but my community is made up with members from all around the world. So we actually trade this strategy using the first 15-minute candle of any trading session. That's on Forex, futures, gold, indices, everything, and I'm gonna break down that strategy in full. Then I'm gonna show you an entire day back testing one trade for every session to show you this actually works. Now, before we get into the lesson, 5 lucky commenters are getting free VIP. I just want you to tell me something about your favorite animal or pet, because my dog Honey right now has cancer and I'm really looking for some prayers. Now, let me teach you the easiest scalping strategy that I trade daily, step by step, starting with step 1. For step 1, we're on the M15 time frame. We're looking at this 15-minute candle right here. It goes down, it creates a candle low, it goes up, it creates a candle high, and then it closes. This gives us the range top and the range bottom, creating our opening range. So it's the exact same thing on the chart. You can see here the candle goes up, the candle goes down, and then the candle closes. This creates our range high and our range low. For step 2, we're just monitoring on the M5 time frame. So let's go to the M5 time frame. Look, we could play a couple of candles out here. We are just waiting. And what are we waiting for? We're waiting for the direction on the M5 time frame. We want to see a big candle come out and close impulsively outside the top or the bottom of our range. So as the price plays out here, you could see we start getting those huge impulsive price moves. 1, 2, 3, 4, 5, 6, 7 green candles in a row. Big green candles creating displacement. Once we get the break and close outside the top of the range, and it happens in an aggressive way, it tells us the market is likely to continue in that direction. At this point, there's a ton of ways to enter a trade. Personally, I like levels of demand. I like fair value gaps. That's what we're focusing on today. So as you can see, this candle right here closes here. That creates a fair value gap. This is an area of imbalance in the markets. Let me zoom in to show you a little bit further. This candle closes here. This candle closes here. So everything in this box right here is considered a fair value gap. It's unmitigated price. And we get that when we have an aggressive move creating displacement. So now it's possible for us to enter a trade. And we want to enter at that fair value gap that's just created, but not right away, right? We want to make sure that the fair value gap is actually going to hold. So in order to do that, we want this candlestick pattern right here, a bullish engulfing pattern. That's a pattern where this candle right here engulfs this candle right here. It's simply just bigger, and that's a momentum indication that price is going to continue in our direction. At this point, I'm willing to enter my trading position and let the trade play out. Now, at this level right here, I will consider taking a partial profit because this is a level of resistance. So maybe I'll take 20-30% off the trade. At this point, I'll generally pull my stop loss to break even, and then I will let the trade continue to play out, eventually going all the way up here and smashing my take profit beautifully. Now, I'm going to show you where I put my take profits, where I put my stop losses as I go through 5 trade examples, and I'll show one new confluence in every example that I use to increase my win rate when I trade with this strategy every single day. Like, for example, on this trade here, I would have been looking at just trend direction, right? We had the price push up, and then we had a pullback. I don't see any other pullback until we get back up here. There's the pullback. Price pushes up again. We get 3 red candles. That's another pullback. pullback. Price pushes up again. We get another pullback, and then we smash the take profit. So on this trade, I'm just using very basic market structure as we're consistently getting breaks of structure, making new highs every single time, making for an easy trade position. So if you really want to master this, watch all 5 trades. Let's get started. Now let's start the easiest scalping strategy I trade daily with trade 1, a NASDAQ trade at 9:30 a.m. Eastern. This is one of the most common pairs and one of the most common times to trade the strategy, so we might as well start right here. The candle is moving up, the candle is moving down, and then at some point, this 15-minute candle is going to close, giving us our range high and our range low. Then step 2, I'm coming to that 5-minute time frame. Now at this point, I'm just waiting for that price to break out aggressively like we just saw right there, creating displacement in the market. And in this case, I was looking at this demand zone right here, which is the red candle before the huge push up. Now, you also could have been looking at this fair value gap right here, but if a clean demand is available, I will take it. And a demand zone is just a huge push up with big green candles in a row. I've got a lot of videos on that. Make sure to check them out on this channel. And then I'm just waiting for price to come back to that level of demand. So slowly but surely, price comes back to that level of demand, and then I'm still not entering the trade right here. I don't want to enter my trade and have price come all the way down and knock me out. I want that entry confirmation. So I'm waiting for the candle pattern, right? What pattern do I want? I want the bullish engulfing pattern. Again, this is just telling me that there's some momentum in the market, and this is where I'm going to enter my trading position. I have a take profit up here for about 455 and a stop loss down here for about 298, a risk reward ratio of about 1:5. I have my stop loss just below the range right there, and for my take profit up here, just going for a little bit of trend continuation to the upside, expecting a break of structure up here. And for an extra confluence on this trade, you can see I had a level of resistance right here, and price recently broke through the level and then retested that level right here, gave us the pattern. So a perfect place to enter a trade. Let's lay that position out. You can see here price moving up steadily. At this point right here, I would consider taking a little profit off the table, pulling stops to break even, and then continuing to play that trade out, eventually smashing the take profit for about 455. So after trade number 1, I'm up 455 in my backtest. For our second backtest trade, we're starting at 2 a.m., which is either Europe or London pre-market. We're going to trade the euro US dollar, show you this works on Forex too. Now this is going to be a sell trade example, and I'm starting on the 1-hour time frame. You can see price was pushing down, broke through the support level, turned it to resistance. At this level right here, we had a fake out, but after that fake out, we respected the level here, respected the level here, respected the level here, and it pushed down aggressively. And now price is coming back to that hourly level of resistance again. So boom, let's take a look on that 5-minute time frame. We've got our 3 candles right there, creating the top of the range and the bottom of the range right here. And now we're waiting for a big move. We're waiting for that displacement right there. Now, did we just get that displacement? Not really, right? You may be looking at this level right here saying, oh, that's a pretty good level of supply. That's a little bit of displacement, but it's not a big move here. It's a really small move. It's not enough displacement. We're looking for a little bit more of an aggressive move, which is exactly what we get right here. 1, 2, 3, 4 red candles in a row. We get the break of structure right here. Now, we don't have any fair value gaps, but this is our supply zone right here. Not the strongest supply, so we'll make sure that we get that entry confirmation. So when price comes to the level right here, and then we're waiting for a reaction down before we could get into the trade, right? And so what did we get? We got our bearish engulfing pattern. I know this circle's a bit too big here. This candle is engulfing this candle right here. Obviously, we're selling. So with my take profit all the way down here, I'm targeting about 247, and my stop loss up here, if I lose, I'm losing only about 99. Great risk reward ratio. So you can see right here, price just tapped our hourly resistance, shot down, created the supply. We went right into the trading position and pushed down that bearish engulfing, helping us with momentum, had good displacement, and we smashed the take profit right there for 247. Now, Now, my stop loss on this one, I had it just above this level of supply. I could have put it up here, but I was happy with the supply because I had that bearish engulfing candle. So I was getting about 2.5 risk reward ratio. And for my take profit, I went a little bit riskier here. I probably should have had the take profit at this level right here because this was the most recent level of support. So after 2 trades, we're looking really good here, sitting at just over 700, and we still have 3 trades to go. For the third trade, we're using the orb at 8 a.m., the beginning of the US session on the Euro Swiss franc. Let's jump right in on the 5-minute time frame here. We've got the top of the range, the bottom of the range. Price jumps out the top, the bottom of the range, and the top of the range. You can see right here, came out the top briefly, came out the bottom briefly, but then it came out aggressively with that displacement out the top, creating a decent level of demand here with multiple fair value gaps. So that's a pretty good level of demand, actually. We do have a pretty obvious level of support forming down at the bottom here as well. And so price comes down right here. I don't have the bullish engulfing, but I decide I could get in here for a small one, about 258 on the top, about 159 on the bottom. And as I play this one out here, you could see it did go against me before shooting up really aggressively. So I lost about 159 here. We had such an obvious level of support. It was very available for the liquidity sweep, which is exactly what happened before price moved up. Now, obviously, I had a really tight stop here. I could have had the stop below this level right here. If I did that, I could have stayed in the trade, and I could have targeted higher as well. So I could have made this a fine trade. I went for something a little bit too small here, and it cost me. That brings us to 543, which is still an excellent day, but it's important to understand that no trading strategy is going to win every single trade. Let's jump into the next one. 2 more trades to go. Trade 4 here, 3 a.m., the beginning of London session, and we're trading some UJ. So I'm already on the 5-minute time frame here. You can see we have a 1-hour level of demand. As I play this out, we create the top of the range, the bottom of the range. This is our trading range. And what happened? Look, let's take a look right here. Price just pushed up aggressively off of our 1-hour level of demand, and that created a level of demand right here on the 5-minute time frame. But price didn't break out of the range yet. It came back, and look, it respected that level too. So this level of demand got respected. This level of demand got respected, and we created another level of demand right here on the displacement and the huge breakout right here, the aggressive price move with a fair value gap here and a big fair value gap here and a fair value gap here. So this is a nice looking demand right here. And what happens? We're waiting for price to come down to that level, but there's no bullish engulfing. What am I supposed to do here? Well, in this case, I'm entering the trading position. We have a strong wick right here. This demand held, and recent price action is the most important price action. So I'm going in for a heavy buy on this trading position right here. I'm looking for 1159, and if I lose it, losing about 541, I have my stop loss below the level of demand, below the range midline, and I have my take profit up here because I'm expecting the market to continue up. Break a structure here and another break a structure right here as we carry on. So let's play that position out. You can see it goes well. Maybe at this level right here, I would be considering taking some profit off of the table like I often do, setting that stop loss to break even, and then letting the rest of the position ride, smashing my take profit for 1159. So that big backtest trade got us 1159. I've got one left. Don't miss it. All right, for the last trade, we're saving the best for last. We're trading the Swiss franc in the Asian session. You can see right here, we just created the range. Our range high is right here. Our range low is right there. Price tapped into this hourly level of resistance. So we're definitely looking for sells from this level. Now, all I want is that displacement push, right? 1, 2, 3, bing. Got myself that nice push out of there. A huge red candle. Now, I was looking at this level of supply originally, but after seeing this huge push down right here, I did not want to miss my entry. So I spotted this fair value gap right here. Price just tapped into that level, and you know the next thing I'm looking for is the bearish engulfing candle pattern. I got my stop loss tight. I had it right there. I was looking for a tight one, only a few pips. Had my take profit on this wick level right there because price did jump up off of that level once before. got into my sell position, looking for about 540. If I lose, I'm losing about 180. So let's play this bad boy out. You could see we stayed in our levels, we respected the supply, and smashed the take profit for a beauty. So after the back test, I won 4 out of 5 trades over 2,200. Now, obviously, back testing's a lot easier than real trading, but I am using this scalping strategy in my VIP trading room, which you can check out. And I even coded a trading robot that uses this exact same strategy. So you can check those out. Smash the like button, comment, maybe watch this video right here. Definitely watch this video right here, and I'll be back next week. Much love.